Okay. Good afternoon, everyone. Happy Wednesday. I hope your week has been going well thus far. My name is Denisha McDonald with Our Village Initiative. We are a social impact platform and consulting firm, and our goal is really to help you figure out your finances and get everything together so that if your goal is homeownership, we want to help you get there. If it is to build wealth, we want to provide the tools so that you can accomplish that as well. So thank you for those of you who have been joining us over the past couple weeks. We've talked about the home buying process and building your team. We've talked about budgeting and saving. Tonight, we are going to be talking about credit and all things credit. Why is that important? Because even if you have, hold on one second, let's take the sound off. Okay. Even if you have the money saved, so you did the budgeting and the saving, but your credit is less than it needs to be. So in the 500s, you're not going to be able to pass go, or it's going to be really, really expensive for you. So today is all about helping you get those things in order. And then our next session, right after Thanksgiving, we're going to have a lender come in and talk about the different loan products and all of the down payment assistance programs that are out there. There are quite a few that are out there. I actually had a meeting with another lender today and found out about one that they offer specifically to people who use them in addition to what's out there. So really excited for that session so you guys can learn all about your options. Please mute your mic. If you have a question, place it in the chat, and if it goes along with what I'm talking about in the moment, I will answer it. If not, at the end of the presentation, I will go back and try to answer all of your questions as long as they go along with what the topic is for tonight, okay? Please don't be afraid to participate. Ask questions. That's how you make sure you'll be okay. The goal is for you to have a pre-approval in hand and be able to start shopping because you know all of the things you need, right? We've talked about building your team. We've talked about the process. We've talked about how much you need to have saved. Now we're talking about credit. These are the things that matter most when you're thinking about buying a home. So once all your numbers make sense, you can start that process with talking to lenders and kind of advancing the goal of home ownership, okay? Okay, so what is credit? Credit is pretty much a measure of how likely you are to pay something back. So you borrowed money and now you have to pay it back. Ironically, our system is set up where if you are super responsible with your finances, you pay everything in cash. So if you don't have the cash, you don't buy it. That means you're really responsible to me. They can't loan you money to buy a house because you don't have a report card on your spending habits or your payment history. So in America, they really do require you to have debt, so to speak, or show that you can manage debt so that they can lend to you some more. Okay, so having good credit means that you are easy to trust. You borrow money, you pay it back on time. Having bad credit tells a different story. It says that you are kind of hard to trust because you borrow money and sometimes you pay it back. You might pay it back late. You might not pay it back at all and get sent to collections, or that you're inconsistent, right? So your credit tells a story to lenders because they don't know you, right? They don't know your life, what you do. They don't care. It's all about numbers for them and really assessing risk, okay? Oops. So there are 3 credit bureaus that we pay attention to. We have Equifax, Experian, and TransUnion. And most creditors report to at least one of these. Some can report to all 3. Sometimes it might be 2 of them. It's hit or miss depending on who reports to all. So ironically, I have 2 Bank of America credit cards and only one of them reports to TransUnion. Why is this? I have no idea. But again, that's to show you, like, when you look at your credit report and your credit score, it's going to be different across the different bureaus because not everyone reports to all 3. So it may look a little bit different. And when they report or they send in your information every month, that timing may be a little bit different. So you see your score will not be the same. Equifax is not going to be the same as Experian, which will not be the same as TransUnion. Okay, and that's normal. You do have the right to access this information and the right to correct it. So if you see anything inaccurate on your report, please let them know. so that you can correct those things, because it really does help you in the end. Okay. And it's free of charge for you to get access to your report. You usually have to pay if you want to see the score. So if you go to annualcreditreport.com, they provide your credit report. You get all three of them. You can request all three all at once, or you can space them out. I tell people you get one, depending on what your goals are. You get one the beginning of the year, you get one towards the middle, you get the third one from the third credit bureau towards the end of the year, so you can see kind of across the board how you're doing. If it's more of an urgent need to verify all of your credit accounts, then you pull all three and review them. Okay, so it kind of depends on your timeline of what you're trying to do or what you're trying to accomplish will determine which strategy you use, right? This is so that you have free access to your credit report. You will have to pay for the credit score most times. So you might be wondering, well, what's a good credit score? Credit ranges from 300 all the way to 850. 300, no one starts at a 300, so I'll say that. We usually have no credit, or because you've been doing the right thing, you'll start off closer to like 650. If you've been doing something wrong, that's where you go all the way down, and you might be in the 500s or even the 400s, right? You rarely see anyone at the actual 300. That's kind of just where the scoring model begins. So usually people have zero credit, or they have, in the 600s if they're doing things right or higher, or it's in the 5s or below because they messed up somehow, okay? For purchasing a home, especially in the market that we're in right now, you need a minimum of a 640 pretty much across the board. For any of the down payment programs that are available, they range. Most of them are 640 and up. Some of them might be a 700 that they need for your credit score to be. But for the most part, 640 is the minimum that lenders are requiring and that these down payment programs are requiring as well. Can you buy a house with a lower credit score? Yes, you can. There are loan products available for you, but the lower your credit score, the higher the interest rate. So it is in your best interest to spend the time to improve your credit score than to just go buy a house with bad credit. Because if we are at 7 and you have bad credit, you might be at 8 or 9, right? That's a lot of money over the life of the loan, and a lot of money in addition every month that you're going to have to pay because you have bad credit. I'd much rather you spend the time correcting what's wrong on your report, so that you can take advantage of all of the programs. There's a lot of down payment money out there right now. And to have access to that, you do need to meet that minimum requirement of a 640. So what makes up your credit score? I think it's really important for us to pay attention, and we might say, well, these are all percentages. What does it all mean? I'm going to show you, because it translates really well. So you start to figure out, what do I need to do to improve my score? If I'm missing one of these, I need to focus on it, right? So the biggest impact on your credit score would be payment history. You need to, above all else, make sure whatever you borrow, you are paying back on time every month. It doesn't mean you pay in full every month, but you do need to pay whatever that minimum requirement is. You have to pay that every month on time or early. Paying early helps you as well, because that's 35% of your score. And I'm going to go to the next slide just so you guys can see what I'm talking about. That 35%, everyone starts, like I said, the scoring model starts at 300, right? 300, and then you pay all of your bills on time. You don't miss it. You're never late. You automatically now are at 492.5, right? So you see how if you mess up, it starts and it tanks you quickly. And I'll show you in the next slide. Throwing these off by a little bit has huge impact. It takes one error to plummet you almost 100 points, and it's going to take you so much more good activity to get it to go back up that same 100 points, okay? So the next percentage that we're looking at is amount owed. 30% of your credit score goes to how much you owe. So if you have $1,000 credit card and every month you're using $1,000, they're going to say you're utilizing way too much of your credit, which may or may not be true, But to the lenders, what they see is you're not really good at managing your money. You need this credit every month to get by. I don't know if I want to give you more, because what if it's too much for you to handle? Right? That's the story that they read when they see your credit score or your report showing that you're using all of the credit available, right? It might be that you're like, I use the card, I put everything on the card, and I pay it off after. But the timing of when you do that matters, because if it's reporting that you are maxed out, that hurts you. So if you're going to do that as a strategy, you need to pay it ahead of time back down to zero, so it reports as zero to the credit bureaus. Hopefully that makes sense. If not, let me know. But the gist of it is, do not max out your credit cards, because if you're showing that you are maxed on all of your cards, it's not going to help you, and your score is going to go down. So that means you're going to lose that 165 points. Between all of those, you're already into the 650, 670 range, right? So between those two, which make up 65% of your score, if you do that right, you will guarantee you're going to get a loan. If you mess that up, it's going to slow down the process for you. Okay, so that's why it's really important to guard those two. Next, we have new credit and credit mix. Those are 10% of your score, so 55 points each. New credit is more, so don't go out and apply for new credit when you're trying to buy a house. We do not advise that. But to help you boost your score, if you know you're 6 months out, a year out before you buy, then that helps you establish more credit history. So you'll get 55 points for that. And then they want to see the credit mix. So is it all credit cards on your report? Do you have student loans? Do you have an auto loan on there? Do you have installment loans on there? They want to see the variety of your credit mix, because if it's only credit cards, that doesn't necessarily always help you, right? So they want to see credit mix. But as you can see, it doesn't hurt you that much. It's only 55 points compared to payment history and amount owed. So the balance that you have every month, right? Those two, they will kill you if you're trying to buy a house. And then length of credit history. The longer you have credit, the better that looks to lenders, right? And although that's important, we see it's 82 points, right? So if you got all of the other points, and you're maxed out on those, we see what we have to fix would be the length of history, which is just time in, and there's strategies for that we can talk about as well. So we talk about credit mix. And what does that mean? Your credit mix is the difference. There are two types: revolving credit, revolving debt, which is the amount changes depending on how much you use the credit line available. So that can be credit cards or lines of credit that you have. So the more you use it, the debt's going to go up and your payment's going to go up. The less you use it, those numbers are going to come down, right? You're required to make a minimum payment every month, and that's what they check. The next type of debt is what we call installment debt. And that's where it's a big price, or a lump sum is how much you borrow. And then you're making equal payments every month until you pay it off. And that's usually car loans, personal loans, student loans, mortgages, right? So these are things where it's a set amount. You buy your car for $10,000, now like $30,000. You buy your car, you take out the loan, and they're going to tell you how much you pay on that. So it might be $500 a month for the next 7 years, which covers principal and interest, and then you'd be paid off after the 7 years. Okay, so those are the installment loans. They do like to see those because it shows consistency. Oh, my screen. What do lenders want to see? Like I said, they want to see at least a 640 credit score if you're trying to buy a single family or a condo. And if you're thinking about buying a multifamily, they want to see you close to that 660 range. I try to get people to a 680 minimum credit score, because once they pull your score, it's going to drop a little bit. So I prefer you have a little bit of wiggle room in there. And then that just makes you, again, more appealing for some of the products out there that may require a higher score. They use your middle score. So like we said, you have Experian, Equifax, and TransUnion. Of those, they're hardly ever all the same. They're going to pick the middle score. So if you're at 680, 700, 710, they're going to use the 700 as the score to qualify you. You must have 3 trade lines. So whether that's a credit card, or it could be 3 credit cards, it could be a credit card, student loans, and an auto loan. Those are 3, right? They just want to see 3 trade lines of you borrowing money and paying it back consistently on time every month. They want to see that history. The goal for when you have credit card debt is to be at 30% or below of utilization. And I have an example later on to show you what that is. So if you have a $1,000 card, you don't want to go over $300 on that card. That will help your credit bump all the way up if you're able to maintain 30% or below. When you're going to get a mortgage, if you have any fraud alerts, so some people freeze their accounts because they don't want, people to use it, or they're afraid of fraud, so they freeze it. When you're going to get a mortgage, you want to release that freeze on your account, and you also want to explain anything on your report or why it was frozen, okay? Everything needs to be in writing, so they want you to send an email or write a letter, scan it, and send it to them. And then any inaccuracies. So if you have any address changes, any inquiries, or any late payments, you need to also explain all of those things. I would say spend the time to correct them before you get a mortgage so you don't have to explain it. Okay? So what do you do if you don't have credit history? I think in the chat I saw, if you're an immigrant and you don't have credit history, you don't have a credit card, you don't have anything. Well, they do allow you to use non-traditional credit. So that would be, you still need to have the 3 trade lines. It would be 12 months of rent paid on time. So you would either provide a bank account, bank statements showing when your rent is paid every month. Hopefully your landlord deposits your check on time every month. But you'd have a copy of the check that you're going to give the landlord if you're mailing them a check, and then you have your bank statement that corresponds to that date, right? Or if you're using a money order, same thing. Always make a copy of your money order, and have that, and you look in your bank statements to see when it was deposited, right? They want to see 12 months, sometimes 24 months of on-time payment. If you miss one of those, it starts all over. So you have to show minimum of 12 months of on-time payment. So if you have one that was 30 days late, doesn't work. They can't use it as one of your 3 options, right? But that's a major one that they want to see. You can also use a utility bill in your name, and they want to see, again, proof that you pay on time every month. They look at your bank statements for everything. So you'll have the invoice from the utility company, but they are checking your bank statement to see how much is coming out of your account consistently every month to cover those debts, to make sure that they're not late. And then if you have car insurance or gym membership or childcare, anything else where it's a consistent amount that you're responsible for from month to month, as long as it's documented, they're willing to accept that as well. It varies from lender to lender in terms of what they want specifically, but it's worth a conversation to ask them when you're going through this process. Hey, I don't have a credit score, right? I haven't been around long enough. I don't have that established. Do you use non-traditional credit to issue pre-approvals? I'm going to go back and check the chat to see if any of those questions were answered. And just let me know if I answered your question so far. The credit score is by the credit bureaus. They've been around for forever. I don't think it's an accurate depiction of people's responsibility and ability to pay, but I don't make the rules. So we go with it, right? We play by the rules of the people who have the things that we want. I answered the percentage that we need, and then the lack of history for immigrants. What would that look like? Do health bills affect credit? Only if you're sent to collection. So it doesn't show up on your credit report if you have outstanding medical debt until you go to collections. So if you're not paying it and you go to collections, that's not good because it's going to tank your score. would the non-traditional method help boost those with credits who already have credit scores? No, yes and no. So there are websites and platforms that you can use to pay your rent, and they will report that to the credit bureaus. Those sites can help you boost your credit score because it's going to show another trade line. The caveat to that is also, if you do not pay on time, they're still going to report, so that can hurt you. So as long as you know I always pay on time, it will never be an issue. You can use one of those online sites. I'll make a note so I can send that to so they can email that to you. Rental payment sites. Okay. Okay. I'm going to pause for 1 minute and stop sharing my screen because I think something just happened to my presentation. So I just want to double check first. Okay. Thank you guys for your patience. Let me know if you have any other questions in the meantime, because it is super important for you guys to understand credit because there's strategy in it. Like I said, with those numbers that we were going over, like that's how you, I don't want to say manipulate the system, but you understand how it works. So if you know you don't pay on time, then we need to fix that ASAP because that's the majority of your score. So we need to start paying things on time. I have a slide later on that you're going to see if you are above that 30%, what it does to your credit score. And as soon as you get below it, what it does to your credit score. Okay, so step one, I want you guys to pull your credit and evaluate your report. I want you to look at your FICO credit score, not your Vantage score, because that's what lenders use. And Credit Karma is not the best because they don't use your FICO score. So their credit score number is going to be inaccurate. If you know you're not planning to buy in the next year and you just want to monitor what's happening on your report, you can utilize Credit Karma. I use Credit Karma because it's easy. It's just an app on your phone. So I use that just to track what is happening on my credit report from month to month. But when I want to know my score and I'm about to make a big purchase, then I look up my FICO score. And we have some sites where they are paid sites and not free. So myfico.com, identityiq.com, myscoreiq. These are different websites where they give you your FICO credit score. And you can also look on your credit card statement. As long as it says FICO, you can utilize that. So I know Bank of America uses FICO, American Express uses FICO, Discover uses FICO, Chase uses FICO, Capital One does not. They use your Vantage score. So just double check to see who reports and provides your FICO credit score. If you want to kind of just, I don't want to pay right now to monitor my credit, but I just want to know where it is. You can utilize kind of those avenues as well. If you think that you need credit counseling, so now you know your credit is not above the 640 requirement, you have some late payments, you may have gone to collections on some things, you're like, I need some help. You have some options, right? There are some free options available. American Consumer Credit Counseling, or their website is consumercredit.com. They are located in Newton. So they're in Massachusetts. So you could go to their physical office, but they're online as well. That's a nonprofit that provides credit counseling. Boston Bills Credit is a network of organizations that offers credit help to Boston residents. So you can look there and see all the different organizations that have credit counseling available to you, where you'd get a counselor to help you one-on-one. They can pull your FICO credit score with you or credit report and review it with you and help you identify what things you need to work on, right? So those are free options available to you. There are also paid options. If you're like, I don't want to be the one to send out dispute letters. I don't want to do anything. I just want someone else to handle it. There are also paid options available. I would recommend you research them, read the reviews. If you know anyone, it's better to identify a credit repair company when it's referred by someone who's used it. So you can, check on their experience is really important. So there are paid options, and that price may vary a lot. I've seen some people are $50 a month. I've seen $100 a month. I've seen $6,000. It ranges. It just depends. I'm going to look and see. Here you logged into Experian and your credit score is always, there's nothing there. Is that accurate? I don't know what the rest of the question is. So if you want to put that in the chat again, that'd be super helpful. You should be able to see your score your report when you log into Experian. They don't always share the score. I think when I log in, I don't see the score. I see the report, and then they make you pay if you want the score. My FICO is a paid platform. So the only free platform is annualcreditreport.com, and they give you your report, but you will still have to pay for your score. The score is never given for free. You would have to pay for that unless you go through a lot of banks and credit card companies now. They give you your FICO score on your statement. So you can utilize that if you do not want to pay for credit. Okay. So the next thing we want to do is to review and dispute. Why? I want you to dispute everything that is inaccurate on your report in writing. Yes, you can do it online. Does that always help you? I want a human to read my things because online, it is computers that review anything that you dispute online. So they have their algorithms that will automatically accept or deny certain things, right? So I prefer to send the letter, but know that you can dispute. I think it's, if you're going to do online, use that for if your information is inaccurate. So if you have your address is inaccurate, your name is inaccurate, that makes sense that you can try it there first. But if you're actually disputing account information, you should mail those in, okay? So you would send your dispute letters certified mail and request a signature because you want to make sure someone, a human, got a hold of that document, right? Because they have 30 days to verify the information. So that clock starts ticking the moment someone signs off on it, right? So we want to make sure that it is received. So you need to send it certified mail. And you want to track your disputes so that you know when you need to follow up with them again because they haven't issued a decision for you. Okay. If you've missed one payment, you've always had a great history of paying on time and you missed a payment and it dropped your credit score, don't hesitate to send a goodwill letter. And that's just letting them know you're explaining the truth. Hey, I've always paid on time. I'm very responsible. It was just this one incident happened. Explain what happened and I missed my payment. Are you willing to correct that for me? Okay. And that's something that you can do even if you miss a payment and you're late, not where it gets sent to as marked as a late payment. So on your credit card, it's not going to be marked late until you are 30 days late, right? But if it was due on the 1st and you paid it on the 5th, you're going to get a late fee, but it's not going to impact your credit. Okay. So there's a difference there. So send them that goodwill letter. It happened to me once where I was a couple of days late on a credit card because I have no idea what happened. My automatic payment stopped sending payments to them. And they charged me a fee. And I'm like, you guys have seen for over 20 years now, like I've never been late on any of my payments. That's not part of my character. I don't even like everything is set up automatically. And we went in and we're like, I don't know why it's no longer automatic payments. And they were like, okay, we'll reverse that. They removed the late fee on there and they let me know it's not on my credit report because again, I paid before the 30 days and I have a history of never missing a payment, right? That was the first time that I ever missed anything. So you can send goodwill letters or call and talk to them and see if they're willing to work with you for that. When you are speaking to, let's say you're sent to collections and a collection agency calls you, never, and I mean never, verify any information about yourself on that call. Okay? Because they're going to say, hey, are you Denisha McDonald? I don't know why you asking. How may I help? And you're listening because they have to share everything. And they're going to say, can you confirm your address? You can look at whatever address you have on file. You can mail to Denisha McDonald and go from there. Can you verify this account? You can mail whatever information you have and it will be reviewed. Why do you want to do that? Because if they have inaccurate information on you and it is tied to, this is why we say first step is dispute your name, if your name is incorrect, your address, any of your personal information, because if it is tied to something that was inaccurate, most times it has to fall off because they couldn't verify that information on there, right? So now it's questionable. Does it belong to you, right? So now they have to remove that from your credit report. Okay, if you confirm everything for them, now you've just proven their case. Now it's less likely to be removed from your credit report. Okay, so the burden of proof is on the collections agency, not on you. Make sure they mail everything to the address they have on file. Do not give them your current address. They mail it to the address that they have on file. If there are charges on there and you want to settle, you can speak with the collections agency and see if you can negotiate that amount, right? It might be where you owe them $1,000 and it's, you don't owe them, you owe the person or the company that you didn't make the payments to. So it might be where you owed Bank of America, but because you never paid them, they sent you to collections. The collection company did not pay $1,000 to get your report. They probably paid $200 or less, right? So what you're trying to do is see if you can pay them because you do owe the debt, but for less. See if you can settle that for a lot less. Okay, so you have some options there available to you, but I always opt for disputing first because some things may fall off and make your life easier in the process, okay? Step 3, bring down your high balances. You guys have to pay things on time every month. There's no sympathy, only for the first one. After that, they see a pattern because you're always missing payments. My parents still do not like to set things to automatic payment. They log in every month and pay bills. And no matter how much I say, just set it, make sure the money's in there and set it. Because if anything happens in life and you are running late or you forget and you miss that payment, they're going to ding you. It's going to be a late fee. And if you actually forgot, so like you think you paid it and you didn't, then that's going to show up on your credit report because you're not going to meet the 30-day requirement. So please utilize automatic payment to help you and make sure that you are trying to pay down your debt aggressively. So earlier, we talked about your balances. If you have a $1,000 card, ideally we want to be below 30%, so use less than 300 on the card. Sorry about that. That's me. So you want to be below 30%. If you want to see your credit score jump, then you want to be below 10% utilization, because that's really what they want to see. If you're below these numbers, you're going to see a spike in your credit score. So for the utilization, they're looking at what is the balance across all of your cards, right? So in this example we see on the right, when you add up the limits for all the cards, it's at 22,500. But the balances, or how much the person uses on all of those cards, is at 11,800. When we do the math, so we do the balance divided by the limit and multiply that by 100 so that we get the percent, they're using 52% of their credit, right? So that person's credit score is going to be lower than someone who's using only 30% of their credit. So we want to make sure that we're maximizing by paying down debt. So if you're trying to buy a house and you have a lot of debt and your credit score is not where it needs to be, focus on paying down the debt and paying on time every month, and you'll be killing two birds with one stone because you're going to be reducing your utilization right? And every time you do that, your score is going to bump up just a little bit. Once you get to that 30%, you're going to see a spike, okay? And then because you're paying down your debt, obviously your credit score is going up. So you have less debt. That helps you be pre-approved for more from the bank. And then now your credit score is going up. So there are two things that you're doing to help yourself when you want to purchase a home. Here is, hold on, this is right in my way, to show you guys what it looks like or what the impact is when you go above that 30% utilization rate. So here, this is mine. I did a balance transfer and it was a family thing happened where I had to do that. I monitor my credit, so I'm always above a 700, but I went over because I stay below that 30% utilization. I'm usually in the 20 to 10 range. And this put me over the 30. Immediately, once that happened, I dropped 71 points. Never missed a payment, pay on time. I don't max out my cards. But because I went over that 30%, it jumped. I lost 71 points on my credit. So I wanted to show you guys how quickly it happens with that 30%. Once you're above it, you see a tank in your score. As soon as you get below it, your score increases almost about the same amount. My score went back up, I think, 65 points once I paid that off, okay? And I got to that below the 30%. I'm at 26 now. So the goal is to get back. I like to be between 10 and 20. 10 is always the goal, okay? And all I did was increase the balance on one of my cards. You can see I decreased the balance on the other two, but it didn't matter because on that one card, it pushed me over that utilization. And I circled it just to show you that the dates correspond. That happened on the 29th of October is when they reported. That's when, you know, the cause of it was the increase that showed up on the credit report. So if you are trying to find a strategy to pay down your debt, there are two options that people usually utilize. There's the snowball method, and then there's the avalanche method. And this is two strategies used to pay down or pay off or eliminate your debt. The snowball method is where you make minimum payments on all of your cards, and then any extra money that you have, you can throw towards the lowest debt. So if you have a card where your minimum payment's $50, you have another one where it's $100, you have another one where it's $150, you're focused on putting all of your money, any extra, towards the one that's $50 minimum payment, right? Or even if you can't, you never have extra money, you're just trying to pay that one off. You're not going to put any more debt on it. You're just trying to pay it off. Once you're finished with that debt and you pay off that card, we know you're supposed to have $50 a month extra back in your budget. You're not going to use that to go shopping. You're not going to use it to go pay yourself. You're going to take that $50 and roll it into the next debt, which we said was $100 a month. So now on that $100 minimum payment, you're going to pay $150 every month until it's paid off, right? And that's the snowball. When you think of a snowball, it starts off really small at the top of the hill and then gets really big by the time it reaches the bottom, right? So now when you get to the card that's $150 minimum payment, you're going to take the $150 you're paying from before plus the $150 that's left on this card. You're going to be paying $300 a month to pay that one off. So you start to snowball and pay things off faster utilizing this method. And it's using the money that you have in your account and any extra you can throw on it to aggressively pay that off, okay? This way, you're going to pay slightly more in interest because it's taking you a little bit longer to get through the cards. The avalanche method saves you more in the long run because you're going to pay the card with the highest interest rate first and then work your way down, right? And the card with the highest interest rate may not be the one with the smallest balance. It might be the card with the largest balance. But the thought process in that is if I can pay it down, less money is going towards interest every month and more is going towards my debt. So it's going to help me in the long run. Okay? Neither strategy is wrong. It just depends on your goals and what motivates you. So for a lot of people, the snowball method works best because they get to see that they're paying off debt and they're accomplishing their goals faster, right? They're seeing that I paid off one credit card. Now I paid off two credit cards, right? So that motivates them to stick to the plan. The avalanche method, you might feel like you're not making progress because it's going to take you a lot longer to pay off that card if it has a high balance compared to paying off the lower cards first, okay? So it just depends. I don't like using giving away money. So I use the avalanche method, but that's more because I look at how much interest I'm paying on things every month. And it's like, ooh, I'm giving you an extra 100. I don't want to do that. I'm going to pay you off so that I have that money to put towards another debt. So it literally just depends on you and what motivates you and helps you stay the course so that you don't give up on your goal. The key to either one of these working is that once you commit to paying these, you're not adding more debt to your cards. So when you're paying these down, you should not also be swiping your card to increase the balance that you're trying to pay off. You're defeating the purpose, right? So you're committing to paying these down and using cash moving forward to pay off these debts and not incur more debt. This is just an illustration of what I just talked about in terms of taking one payment and always rolling it into the next one for the snowball method. So this is just a visual representation of what I was explaining to you guys earlier, okay? So it doesn't necessarily cost you more money. It's just you're allocating any free money that you have to paying down and paying off your debt on a monthly basis. So when we look at the bottom here where it says total, you see that the amount that you're paying is the exact same every month, but the impact that you're having is different, right? Because you're paying off a lot of these cards as you're going towards it. So by the end, all you should have is your mortgage because you've paid off all of these, okay? I'm going to pause for a minute and see if there are any questions. Okay. Does requesting a higher credit line hurt your credit score? Yes and no. A lot of companies, they do it automatically and they'll let you know in their little fine print if they're going to pull your credit to issue that increase or not. And then so you can decide if it's worth it or not to pull it. Many of them don't pull your credit to give you that increase, but if they do, it's a momentary ding on your report. Hopefully you'll have a big enough boost to your credit score or your credit limit so that it will cancel itself out, okay? Because the goal, if you're increasing your limit, would be to decrease your utilization. So if I am using, I'm horrible with head math, so bear with me because I want to get it right. I think it should just be half of that number, but I'm going to double check before I say it out loud. Yes, just half. Perfect. So let's say you have $1,000 limit credit card and you've used $500 on that card. You're using 50% of the card, right? The utilization on that card. Let's say now you go and you ask for a credit line increase and they granted you another $1,000. So now it's gone from $1,000 card to a $2,000 card. And you still have that $500 on it in terms of your balance, right? By doing nothing else but asking for that increase, you've decreased your utilization from 50% to 25%. So that is a strategy that you can utilize, but just understand in the beginning when you first do it, it may or may not drop your credit score. It just depends on the company that you're requesting it from, okay? And I recommend if you know that you're not going to buy anything major in the next year or so, just I call and I check to increase my credit limits every year just because you never know and it helps, right? I want to have access to it. I don't use it, but I want to know that I have it. So that is a strategy that you can use to help with your utilization and throwing off the system a little bit. Okay. So for those of you who have student loans, this has been killing a lot of people in the home buying process. Most lenders will use the payment that's reported on your credit report. So it's really important to check and see what's on there. What's that minimum payment you're responsible for? We had a break for the past couple of years. They are back now. And if you are not in an active payment, so let's say you're in deferment or forbearance, they're going to take 0.5 or 1% of your total loan amount. Okay. It's not good. Because if you have $100,000 in student loan debt, they're taking $1,000 a month and assuming that's what you have to pay back. If you're trying to buy a house, depending on your income, having $1,000 as debt, they're going to say you don't have a lot left over for a mortgage. Okay. So you want to make sure that we have these things in order. So you want to call your service provider to see if you are in forbearance or deferment, so you're not making payments. Ask them, what will my payments be once I start making payments again? See if you can get that documented and if your lender will accept it, because you want to be able to project accurately and not have them use that 0.5 or 1%, because it absolutely decimates your ability to purchase a home because it's a huge amount, right? If it's reporting that you are responsible for $1,000 a month, but the reality is, if they document it and base it off of your income, you're only going to have to pay $200 a month. That's a huge difference, right? That is literally the difference between you buying a house and not buying a house. So make sure that you're having these conversations, okay? There is something called the income-based repayment program. They also have right now, it's called SAVE, that expires this year in December, where you make the call and you talk to your loan provider and they can base your repayment on your income. So if your income is not high, but your student loan debt is high, they're going to adjust it so that it's a percentage of your income that you're responsible to repay every month, as opposed to what they calculated just from the beginning. Okay? It's really important that you have that conversation. Tomorrow night, I'm actually having the Student Loan Fund. They're a nonprofit that deals with student loans. They're going to be coming in to talk about, if you have federal student loans, what's the process for you to get on these programs, these income-driven programs, or if you qualify for student loan forgiveness, what do you need to do to ensure that you have all of your paperwork submitted before the end of the year? Because a lot of these options expire in 2023. So if you procrastinate and you don't do it, and you're like, I'm going to deal with it in January, you might miss the opportunity. Okay. I made the call to them earlier this year because my friend kept yelling. She's like, just do it. Just do it. I'm like, I don't think I qualify for student loan forgiveness because I worked in a private school. I taught in a university. So like, I didn't have the public school education experience that I thought you needed, but it counted because it was an education and I was able to get my student loans forgiven. I was not going to apply, right? But that one phone call saved me thousands of dollars. So I encourage you to reach out, attend tomorrow if you're able to. I'll send the link for you guys to register if you're interested, or I can share the replay after the session tomorrow. But it's really just understanding what are the things that you need to pay attention to, who you need to talk to, what do you need to say, so that you can get the ball rolling on these to either get your loans forgiven or get to a more reasonable payment plan. Okay. We had a young lady, I gave her the task in August. We had our meeting today. She went from $1,000 a month that she had to repay. She's down to $199. So that's $200. She's saving $100 a month because she made the phone call. Okay. So it's really important, especially when you're thinking of buying a home, to take care of your student loans, because you don't know, you could miss a blessing, right? She almost missed the blessing. I'm like, you were going to have to pay $1,000, and that means you are not going to be able to buy a house. Now we're back in the game, right? You can actually save because according to them, you owed $1,000. That means I know in your budget, we should be able to find that $800. What are we going to do with that $800? So now we're using that to pay off all of her other debt and accelerate her savings for her down payment. So I want you guys to be consistent and be patient. You might be able to get a side hustle, which I encourage you to do. We talked about it last time, to save for a down payment where you could save $10,000 in a couple months, right? Because you control how much you save by how much you sacrifice or how much extra you work. With your credit, a lot of it is you just have to be consistent because it's in your payment history. It's in getting things removed, right? It's in disputing. And the disputing process is not instant, right? That can take 30 days. It can take 60 days. It can take 90 days. It can take a year, right? But you have to be consistent. So if they deny you, you go over that, you dispute it again. There's a process involved in that. So that's where I say definitely connect with the credit counselors, the credit agencies to see if they can help you along that process in terms of getting the dispute letters and getting the paperwork that you need and tracking so that you can improve your credit over time. I never want to tell people, you could increase your credit score in the next 30 days. Outside of your payment history, like I showed you guys for my situation, like it dropped 71 points because I went above the 30%. And as soon as I paid it down, it shot right back up. That's the only way where it's immediate, but you see it's still 30 days, right? Anything else that you have to fix because of late payments, collections, or anything like that, time. So I need you to be consistent and to follow through and to stay on top of people to make sure that you'll be okay. So what are some quick things you can do to improve your score? Like I said, pay your bills on time, right? Set up automatic payments so that you don't forget and make a mistake because the consequences are dire. You can obtain store credit. So let's say you have no credit cards or anything. You can go to Macy's or you can go to Victoria's Secret. You can go to Home Depot and they'll issue you a store credit card, right? And you can utilize that to start building credit. Does it mean you go on a shopping spree? No. It means you buy probably the cheapest thing that they have so that it shows up on your credit report that you're using it and then you pay it off, okay? You can also get what we called a secure credit card. And what that is you take the money, so you take $500 and you give it to Discover and you say, hey, Discover, I want a credit card. So I would like a secured credit card. I'm going to give you $500 and I want you to give me a $500 credit card because it is secured by your cash, right? All the other cards that we have, the Bank of America, like all the Visas, the MasterCards, usually those are unsecured, right? They're just lending you money, but there's no guarantee that you're going to pay it back. Whereas with the secured credit card, their guarantee is if you don't pay us back, we keep your $500, right? So you can get a secured credit card to help build your credit. For those of you, again, someone asked earlier, if I'm an immigrant and I don't have history, what can I do? This is one of those options. You can get a secured credit card to help you. But again, it's time, right? So you're going to get the card. That doesn't mean your credit score is going to increase right away, but in time, it will. So we want to start those things now so that as time happens and life is happening every day, you're improving your chances and improving your score. If you're not planning to buy a house in the next 6 months, you can get a low auto pay car loan that you can pay off, but that you're reporting on your credit report. Okay, so that's an option. If you're not planning to buy in the next year or so, you could get an auto loan to help you. You could get a credit card or take a personal loan from the credit union. That's an option as well to help you. Something that I've done for my godsons is add them to my credit. I have good credit history. So what I did was added them as an authorized user to my account, right? So they get to adopt all of my credit history on their credit report. So if I've had a card for 10 years, now they get that history reported on their credit report because they are authorized users on my card. Do I give them the card? Absolutely not, right? So I keep the card and I use the card to buy gum or to buy gas, and I pay it down or off every month so they're building credit history on their own. And this helps them to now get offers from other credit card companies so they can establish credit. It helps them boost their credit score. The reason why I don't give them the card is you don't have great credit history. That's why I'm helping you. I'm not going to jeopardize my credit because of things that you do. Because if they miss a payment on that card, because I'm taking ownership of it, they also hurt my credit score. And I don't want that to happen, right? I can help them, but they can hurt me. So I keep all control with me. Okay. So you have that option if you have a family member that has really great credit, that you can ask them if you can be an authorized user on their account, but set the rules. Let them know, I don't want the card. I just need your credit history, right? That's it. Also think, don't go asking everyone to be an authorized user on their account, because if they have bad credit history, it's going to hurt you. It's not going to benefit you, okay? And then slow down on opening new accounts. So don't keep applying for credit cards and different things, especially when you're getting denied, because it's just hurting you in the process. You don't need 10 cards. You don't need all of this. We know that there are alternative methods or options for you to get credit. I want you guys to dispute anything inaccurate on your credit report. Pick a day, print out your credit report, get your highlighters and your pens, and anything that's inaccurate, you highlight it, right? And you make a note of what it is. And you just start drafting up your dispute letters to send in so that those things can be removed, right? Those are the easier things to fix on your credit report that could have big impact, right? Please do not max out your credit cards or your credit limits. Like we said, that 30% is key. I've shown you what happens when you go above the 30 and what happens when you get below the 30, right? I never missed a payment. I wasn't late. All I did was go above the 30% and I lost 71 points. Crazy. So think about it. If you have a lower score right now and you pay everything on time and you're like, it's not moving. Once you get below that 30%, you're going to see an increase in your score. Okay. Someone asked earlier, you can request a credit line increase or a credit limit increase, right? I think the negative impact of that does not outweigh the positive, but it depends on your situation. You need to make sure you've always had a history of paying on time, of being a great client. That increases your chance of being approved so that it will be okay. Another strategy is to pay before the close date and not the due date. So on your credit card statement, there are two dates. One's big and bold, which is your due date. And then in the fine print at the bottom, they will tell you your close date. That is when they report to the credit bureaus. Ideally, you want to pay before that date because it's always going to show a lower balance on your credit if you pay it before the close date. So that's another way to kind of trick the system to improve your score. Okay, so that's more of a just timing it. You can't automatically pay that because they don't want to help you make them lose money, right? So that is going to be something that you have to manually log in before the close date and make the payment, because they're not going to allow you to change your date on your credit card statement to benefit you. They need to get all of the money. Okay. I'm going to take a moment and stop and go back and answer some of these questions, and then we'll continue. No, don't apologize for all the questions. So yes, if you get declined, it can hurt you because now you have a inquiry on if it's reported, right? You have an inquiry on your report and you don't get the benefit of having the increased credit limit. So that's where it would hurt you. But also understand, in the grand scheme of things, it's not the end of the world, but we don't want to do that too often. So I don't want you going and requesting credit line increases from 5 different credit cards when you've seen that you've been declined or that you've missed payments in the past, because that's going to increase the likelihood of you being declined. Can you request an increase on a secured credit card? That's a good question. I'm not too sure. I think you can. what I have seen is the goal is to convert your secured credit card to an unsecured credit card. So that's why I gave Discover as an example, because they're one of the companies that they do that, where you can turn your secured credit card, I think after a year of on-time payments and using the card, you can convert it from a secured credit card to an unsecured credit card and potentially ask for an increase at that time. Most companies, they want you to have at least $1,000. So if you're going to try to get a secured credit card, I would say try to aim for $1,000 to put in there if you can afford it, because that's the trigger for all other companies to start requesting or offering you unsecured credit cards. The $1,000 is kind of like the trigger. When you're below that, you get all of the sketchy, predatory credit card companies coming after you, okay? Don't get anxious. If you have questions, let me know what the questions are. Do not get anxious. Credit is one of those slow and steady, slow and steady. The major thing I want you to do is make sure you are paying on time every month, and any extra that you can pay to get below that 30% utilization. Those are the two things we saw, right? Just between those two, that's over 300 points. It's all about the math and utilizing the system to your benefit, okay? Because everything else, the credit inquiry, that's 55 points. If you can gain that 55 somewhere else, maybe the 55 doesn't hurt you that much. So again, it's just using the system. So for me, that's why I ask for credit limit increases. That's why I try to stay below the 30% so that, again, my credit score will always stay in that 700 range, except for the time when I went over the 30%. You saw that. You saw it. I wanted you guys to see that. Yes, the slides will be shared after this. Do not close a credit card. So if you have a credit card and you're not using it, either put gum on it every month, buy gum and pay it off so that it stays active, or just don't close it. Because once you close it, you're decreasing your amount of available credit, which is going to do what? Increase your utilization, right? So do not cancel credit cards because you're also losing credit history. Those are all things that you need when you're trying to make big purchases like buying a house. So I definitely, please do not cancel the cards unless you know it's a weakness. And if I see it, I'm going to use it. If that's more for your mental health and to make sure you stay like you know yourself, know thyself. If you know it's going to cause you to falter, then you can close the card. But I generally do not want people to close any credit. Just don't use it or limit your use of that card, because you still want that history on the card and you still want the utilization, because it does help you with the utilization. The only time I've had people where it's like, yeah, you should cancel it, are those who have a lot of negative history tied to that card. Then it's like, okay, let's get that removed because it's not doing you any good. Okay. So I think I have answered everyone's question that relates to everything we've talked about thus far. So here I wanted to give you guys a visual representation of the cost of having bad credit and why it's so important to pay attention. This slide has been around for years. No one's updated it, so I'm probably going to try to do it myself. But ironically, now these numbers make sense, right? We've fallen back into the time period where, 7.5 is kind of where we are for interest rates for a house. But let's say you want to take out a $20,000 loan over 5 years for a car. You have great credit. Your interest rate is 4.9. That means your monthly payment is $376. Compared to your friend who has bad credit, they've been to collections, they've missed payments, so they're at $579. Because of their bad credit, they're at 29% interest rate. Okay, so they're paying 25% more than you in interest a month. What does that translate to? They're paying double for the same car. So you're paying $375 on a $20,000 car. They're paying $634 on that same $20,000 car. Okay, over the life of the loan, they're going to pay an additional $15,000 because of their bad credit. This is why I say it's worth it to fix your credit before you go make big purchases, because it costs you so much more in the long run that it's not really worth it, okay? When we translate that to a mortgage, I know, $200,000, bear with me, but it's to get the point across. You have amazing credits. You're at a 720. Well, you can even use the 680 like I told you guys, right? You're at $1,000 a month for your mortgage. And then for those who have bad credit, so I'll use the 580 to the 619, because I told you I want you at a 640 to get all of the benefits, right? So you're not there. You're at a 9.9% interest rate, so that's 4% higher. And you're paying an extra $700 a month because of your bad credit. Over the life of the loan for your mortgage, that's an additional $240,000 that you're going to pay because you had bad credit. This is why it's important just to take the time and fix the things that need to be fixed, get in position so that you can take advantage of all of the programs that are out there, right? Bad credit costs you a lot. It costs you now and it costs you later, right? And it costs you every month. Just fix it. And it's not hard to fix it. It just means you have to be consistent. That's the biggest thing. As long as you're consistent, you will get results, okay? For, like I said, again, a lot of the down payment assistance programs, a lot of the loan products with the most favorable rates, you need to have that 640 or better. So just put it in your head. My goal is to have at least a 650. I try to get everyone to a 680 credit score so that you know you should have no issues with your credit, okay? Spend the time, put in the work to make these things happen. We're coming upon, next week is Thanksgiving. The issue is Black Friday and Cyber Monday. If you don't need anything and your goal is to buy a house next year, resist the urge, right? Because you're going to most likely put that debt on a credit card, which is going to increase your utilization, which is going to decrease your credit score, which means you're going to miss out on all the down payment money that's out there. Last time I showed you guys there's over $100,000 out there for some people, over $50,000 for others. I want you to have access to that, but you need to do your part. If they need a 640 credit score, what's more important? The item that's on sale or the house, right? I had a gentleman, we met last year and started his process where we had this conversation. I was like, you need to talk to your kids. Christmas needs to be, I wouldn't say non-existent, but it's optional. Like, daddy's making a sacrifice. I'm not buying Christmas presents this year because I want to buy a house next year. He had the conversation. They all agreed. Guess what? He closed on his house about a month ago, right? So they get to celebrate Christmas in a big way now. He has a 2-bedroom condo for $1,800. That's how much he's paying to own it. We know that you can't even rent a 2-bedroom anywhere in Boston for less than $2,000, for less than $2,400, right? So sometimes the sacrifice now pays big dividends in the future. So I want you guys, again, Black Friday, Cyber Monday is where a lot of people fall off because they think they have to buy these things for themselves or for others. Let people know. Have that conversation. They should understand, right? The goal is you building wealth, you having stability. That means you have to make these sacrifices, and it helps your credit score because you're not going to increase your utilization, okay? So make sure you're paying attention to that. Some things I don't want you guys to do now that we're going into house season, right? 2024, a lot of people want to be homeowners. Do not max out your credit cards. Do not take out new loans. Do not finance a car. So if you know you're trying to buy a house in the next year, in the next 6 months, don't finance the car. I had a young lady, same thing. Last year, earlier this year, she's like, I really don't want to take the bus to work. I just need a car. I'm like, I understand. But if you buy the car, it's going to throw off your debt to income ratio and it's going to plummet. Like, it's not going to help you. You're not going to be able to buy a house. Make the sacrifice. She closed on her house. So now after she closed, I said, guess what? Now you can buy the car. And she's excited because she was able to get the house. But if she did it in reverse order, she wouldn't be able to buy the house, okay? So that's very important. I don't want you to apply for new credit when you're house shopping because any dings on your credit report, the lenders are going to ask, right? If it's not going to hurt you, I mean, if it is going to hurt you, it's not worth it, right? That 30% off on a credit card for one time, it's not worth it. Don't do it. Okay. And then above all else, do not miss payments. Do not make late payments because it is going to hurt you more than you would like. Okay. So here's a strategy for those of you who you pay everything on, you do everything right. Your utilization might be a little bit higher, but other than that, you do everything right. Call and ask for an interest rate reduction. They might say yes, they might say no, but what did it cost you? 3 minutes of your time, 5 minutes of your time? Worth it. I've been doing this for years. You want to make sure you have good credit history. Make sure you know how long you've been a customer, because when you're having that conversation with the rep, you can let them know, I know that I've been great to you guys. Can you guys reciprocate that and be good to me as well? And let them know what's going on. So every year I call twice a year, because one of the reps one year told me every 6 months, like they check it. So that's when you should ask. And they said they don't automatically do it. So they don't care that you've been amazing for the past 10 years. They're not going to reduce your interest rate. But if you call them and ask them, there's a better chance that they will reduce it, right? They don't do things to help you, right? But you can help yourself. So I would call and I usually get 1%, 0.5%. The most I've ever gotten was like 2% reduction in my interest rate when I make the call. I call every 6 months, right? Does it work for everyone? No. My mom calls, she does the same thing with me. She's been able to get a 0% interest rate for 6 months on some of her cards. Others, they've given her a credit, so they didn't reduce her interest rate, but they gave her back the money that she paid in interest for 6 months or 3 months on her card, right? So there are different ways to get benefits from your cards, but you have to call and ask because they don't offer it to everyone, right? To anyone. You have to ask for it. Okay. I called this year because I didn't call all of COVID because they were not helping anyone over COVID during COVID. There were no reductions or anything. And I had a card, it was at 21%. And they reduced it to 14.99%. One phone call. Right? So I encourage you to make the call because it can only benefit you. It doesn't hurt you for calling them, but it can only benefit you. So make the call. If you do nothing else, tomorrow, add it to your to-do list to sit down. I literally sit and lay out all of my credit cards and flip them around to the back and call the number on the back and have the conversation. You're going to be polite. There's no rudeness. Make sure you are smiling when you're speaking to them so it can transfer over the phone that you're in a good mood and you're looking for some help. And usually it works. And if it doesn't work, you set your alarm for 6 months from that day and you call them again and ask. And you don't even have to wait 6 months. One of the financial planners who told me about this, she tells her clients call every month until you get a yes, right? Because the 6 months is more of if they grant it, you have to wait before they'll grant it again. She said, keep calling until they tell you yes. So I encourage you. You guys can take a screenshot or a photo of this image. We're also going to email you guys a copy of the presentation tonight. Here's the script, just so that you guys could use when you're calling them, because it does work. So right here, you guys have the script that you can use for when you are speaking with them. And it's really just letting them know, hey, I know I'm a good client. I've been with you guys for a long time. I've never missed a payment. I'm always on time. I don't max out my cards. Are you able to help me? Okay. So your homework is to review your credit reports. You're going to print it out. You're going to look over it, and anything that's inaccurate, you're going to highlight it and mark it up because you know that's what you need to dispute. Your personal information, you can dispute online. Anything else you want to send letters, certified mail to the credit bureaus so that they can remove those items. It'll give you better understanding of why they're on there, right? If they can't verify or validate it, then it needs to be removed. So you want to make sure that you're doing your part to help you improve your credit score, okay? And then I want you guys to, from this day forward, you're going to pay all your bills on time. It really helps. People are like, that's such easy advice. I'm like, yes, but if you don't do it, it doesn't matter, right? So make sure you pay things on time. Set up automatic payment so that you don't forget. You can always pay extra, but don't miss it. Okay. Make sure you're covered for that minimum payment every month because it is going to benefit you. Okay. So thank you guys. Welcome. If you have any questions, please feel free to put them in the chat. Hopefully it was helpful for you guys today. Major takeaways, can't say it enough. Pay on time, utilization, try to get below that 30%. It really helps to get below that 30%. You see your biggest jump there, and then your next big jump would be once you get below that 10% utilization. So those are the two numbers you want to keep in mind as you're paying down your debt so that you can maximize, right? Those are ways, I wouldn't say to trick the system, but to work the system so that it benefits you, right? We know how they calculate credit. Let's use it to our advantage, right? Until they change it, how do we leverage it to get what we want, right? So getting below that 30% helps you. Making those on-time payments helps you. Asking for those credit line increases when it makes sense, it helps you. So do all the things that you know is going to work to your benefit so you can get closer to buying your home. So thank you guys. If there are no further questions, I have my contact information here for you. Happy to answer any questions that you have. I'm happy to connect you to resources. I'll also send out the link for the student loans event tomorrow. Again, because it is the difference for me, it was getting my student loans forgiven. For others, it's been where they were able to reduce their monthly payment significantly, right? The more you know and implement, it can have great and drastic impact on your finances on your road to home ownership. So I'm going to send that link. I'm just going to send the Zoom link to the library so they could email that out to you guys for tomorrow, as opposed to you registering and doing all of that. It's going to be at 6 p.m. tomorrow afternoon. You guys can ask questions directly to the nonprofit. This is what they do all day, every day. They are a student loan nonprofit, very specific. So they can help you figure out what you need to do so that it benefits you, okay? Have a wonderful evening. Have a wonderful rest of your week. God bless.